My guest today is Chetan Ahya, Chief Economist and Global Head of Economics at Morgan Stanley. It's a matter of pride for us that Chetan has gone on in Morgan Stanley from being the Chief India Economist to the Chief Economist Asia Pacific and is now that company's Chief Global Economist. Chetan, thank you very much for joining us and wish you a very, very happy 2019 first up. Let me come to business because the markets are in a tense mood throughout December. All stock markets have tumbled, worrying that the global economy is slowing. That growth scare continued today, after Apple guided to lower earnings, again because of global growth slowdown fears. What's your assessment of the global economy in 2019?
No, we expect some moderation, but we think the growth will be somewhere around the trend line number, which is around 3.5% for most of the quarters in 2019. But I think the bigger story that we have for 2019 outlook is we think that the mix in growth will change, i.e. DMs will slow, but EMs will actually stabilize. And so therefore, the EMs will take the lead in terms of driving global growth in 2019.
Okay, well, that's positive. But first, let me take the DM part a little more on the United States itself. Wall Street indices were among the worst performers in December, and that's the mother market. What are you expecting in the US? And hence, what are you expecting by way of US Fed policy?
Yeah, so we are expecting the US growth to slow meaningfully to 2.3% average in 2019. From the current run rate for the fourth quarter, it looks like it's tracking at around 3.6%. So we are seeing a meaningful slowdown in the US in 2019, and therefore we do expect the Fed to pause around the middle of this year. Either it will stop taking up any more rate hikes. But I think, Latha, the bigger issue which the markets are now grappling is with the decision on the balance sheet. So at this point of time, we think the Fed continues to run off the balance sheet until the third quarter of 2019. But the market is concerned that that cannot be taken up by the Fed so aggressively. And so we need to wait and watch. On January 4th, we will have discussion from Powell, and then on this Saturday, we will hear from Williams on the path of the balance sheet in terms of framework. So we are watching those two speeches to see if there's any indication coming from the Fed where the Fed would like to bring in the discussion on the balance sheet into play as well. As of now, the Fed has said that, look, if there's a problem on growth outlook, we will alter the rate hike path, but they have not talked about balance sheet. And so I think that's what market is really looking for. If they give a comfort on balance sheet path being also in play as far as overall growth outlook management is concerned, that's what I think will be useful to watch for the markets.
Okay, yeah, we were just discussing that with some other economists. They're not very confident the Fed is as yet that worried about growth to give any indication about balance sheet. But let's wait and see. 4th and Saturday, which would be 6th, are important dates. What about the dollar itself then? If there is going to be such cues, then has the dollar peaked for now?
Yeah, we think the dollar has peaked. And look, I think the other side of this is that the EMs are in a better shape now, broadly in terms of its level of real interest rates as well as the path on fiscal policy. So EM's inflation continues to be relatively low. It's at a 15-year low. And so that's also creating a backdrop where EMs are in a better shape. And so we think both in combination, where US is expected to slow, the Fed is expected to pause, and the fact that EMs are doing okay, the dollar will continue to weaken against broader EM space. Okay.
All right. I'll revisit that with respect to the rupee. But first, let me finish the global questions. Coming to China and the EMs, the Chinese Caixin PMI number, which just came, showed a contraction in December. Tim Cook is worrying about Chinese growth. What's your view of China?
So we think China will continue to show some weak numbers for the next 2 months. There has been a compounding of problems for China. One is that they had been taking up deleveraging, and so therefore they were not taking up aggressive easing, and the trailing tightening on regulatory front on the financial sector has actually weighed on domestic demand. At the same time, we have seen trade tensions weighing on their exports growth. And so the combination of this domestic and external pressures has kept the numbers somewhat weak. And we think this will be the case in the next 2 months. But after that, with the cumulative easing that they have announced over the last few months, more particularly in the last 2 weeks, we've heard them confirming that there will be a VAT tax cut taken up of 2 to 3 percentage points. At the same time, they have increased the quotas for the local government bond issuance, which we think will stimulate the infrastructure spending. So from March, April onwards, we should see improvement in China's growth data. So we do think that China's easing will be effective and drive growth from March, April to this year.
Okay. Now, if US is slowing, and according to you, China is going to slow at least initially for a few months, how come you're positive on EMs? Can EMs grow if the largest and the second largest economies are slowing?
Latha, we are expecting China's growth to slow a little bit on an average for the full year, but on a quarterly basis, it will stabilize from second quarter. And when we look at the EM aggregates, EMX China is actually showing some improvement in the last 2-3 months, particularly Brazil, India, and some of the other smaller EMs like Turkey and Argentina, which were earlier going through a lot of problem, are beginning to see some respite. And so EMX China as a group, which is roughly about 27% or 25% of global GDP on a PPP basis, will actually be the one which will do somewhat better going forward. And that's what keeps the overall EM aggregate stable for us.
That is the most interesting question I would ask you. But first, let me just finish one more global question. Since you're expecting a global economy slowdown, we have seen those fears resulting in steep falls in crude and even in metal prices. How do you think these commodities will perform in 2019?
Well, I think a large part of this is to do with China in terms of broader commodities. Oil is a different component which has got impact of supply side issues too. But a lot of the commodities from demand side is dependent on what happens to China. And so to the extent to which we expect China's infrastructure spending to pick up from March, April, at the same time there is an overall broad-based policy easing that is being taken up, you should see pickup in demand for some of the broader commodities with China's improvement in growth from March, April this year.
Chetan, I'm still intrigued by your view of China. Several economists that I interviewed in this series have worried that the tariff war between US and China is not a tariff war, it's a full-blown Cold War and will spread from tariffs to intellectual property rights and maybe even to military standoffs like, say the South China Sea. You don't see this impacting Chinese growth through the year on one pretext or the other?
Well, I think we would separate the two, the broader issues on geopolitics versus just the narrow tariff issues. So on the tariff front, I think to the extent to which we are seeing a lot of progress from China, just over the holiday period, China has announced that it is going to set up a court to address the intellectual property rights cases separately. And at the same time, they have made law changes which will make it possible for foreign investment to take place without having to make forced technology transfers. So I think China is continuing to take up on all the sort of issues that the US has raised in the context of tariff. And so to that extent, looks like probably the tariff issue may be getting addressed. And I think right now in terms of growth outlook for China, that is a more important one immediately to impact its overall business confidence. But the broader trade tensions are likely to persist, Latha, but I think it's got less of a ramification in terms of the near-term growth outlook.
Well, at least Tim Cook didn't sound so hopeful. Just a few hours ago, he was speaking on CNBC US. Didn't seem hopeful about China. In any case, what is your GDP forecast for China?
So we are expecting growth to slow to around 6.3 in calendar year 19 and then further on to 6.1% in 2020. But look, Latha, I think it's also in the context of the fact that, investors are far more concerned from what seems to be the chatter around about China's growth outlook, that it will just not be able to stabilize and growth will continue to decelerate. And that is something that we differ with because, this is always the case when China's data is very bad. Policymakers eventually do care for the growth outcome and they do take up easing. And we are actually seeing them announcing many more measures in the last few days. So that's where our conviction is that its easing will work. I think there is a question mark on whether its easing will be effective or not. Yeah, you are right. We are on the more constructive side of that coming in through.
No, good. I mean, I'm good to hear something constructive. But let me come to the more constructive part that you said. You said a couple of times that you're optimistic on some EMs, including India. Now, what's the Morgan Stanley view of the India growth story?
So I think India is in a different cycle in some ways compared to China. So structural story is intact, and it had a deep cyclical problem because of the adjustments that had to be made during the period post-taper tantrum. And after that, we had demonetization, GST, and just very recently, we had the NBFC problem. But the underlying fundamentals in terms of the policy mix, i.e. what is the real rate levels and what is the direction of broader fiscal policy, has been quite supportive. And then the outcome of this policy mix, which we watch in macro stability indicators, inflation and current account deficit, that had also been in a pretty good shape. So India is all set to see that gradual improvement in growth. And I think the numbers are still pointing in that direction, except for the auto data that we expect to have had some impact because of NBFC problem and the real estate sector. The broader economy seems to be doing well. The PMI data today also shows that expansion phase continues. So we think India is on a gradual recovery path that continues to build. So we're expecting average GDP growth to be 7.6 in 2019.
Okay, well, just one question for old time's sake. I think your friend, the former RBI governor, resigned, and quite clearly not for personal reasons, but probably on central bank independence issues. When you speak to FIIs out there, is that troubling them at all?
Well, as of now, it seems to have been not as much of a concern to investors when we speak broadly. I think the most important issue that the foreign investors will be focused on is the monetary policy framework management. If there is any alteration to that, I think that could raise concerns. I think the issue of, regulatory front on the banking system, that is less of a focus for the investors. But what they really care is monetary policy framework. So I think people will be watching that one more closely.
Okay. Well, obviously, the most important event for India, monetary policy framework, yes, is there. But the most important event in 2019 is going to be the general election. If by chance there is a coalition, either led by the NDA or led by some non-NDA parties, will that hurt the economic growth trajectory?
I think it will be. So that is a risk. In fact, that is a risk not only for India, but just broadly the EM space. The political risks are there. It's there in India, it's there in Indonesia, in Brazil and Mexico. We are watching for actual policy implementation after the new governments have been formed. So as long as you have a stable coalition government with one of the two parties having upwards of 200 seats, that would be the outcome which will be more favorable for the growth cycle to continue. But if you do get a adverse political outcome, that is a significant risk for India's outlook.
Okay. Well, then now once again a global question. Where will smart money go in 2019? Does it go to developed markets at all? Will a bulk of it go to EM markets? And which asset classes? What exactly is Morgan Stanley advising?
So I think the big call that we made in the year ahead outlook piece from our strategy team was to invest more in emerging markets rather than DMs. And there was a broad-based constructive view on EM currencies as well as EM local currency government bonds and EM equities. So that is the big call that we have made for 2019.
Okay, that's good to hear. Well, let me just get one more India question in. Yesterday, the Indian rupee fell rather sharply. What's your take on the Indian currency? Gentle appreciation, gentle depreciation for 2019?
Oh, we have a view that broader trend for the dollar will be that it will weaken. In that context, we expect the rupee to be on a slight appreciation path.
No, actually, you're there so close to Wall Street. Maybe you understand this better. What's your take on the severe volatility that we have seen in US markets and the scary December fall? Will this volatility and this decline end anytime soon? What is it telling you about the underlying economics?
I think the simple explanation of that is that there has been concerns on global growth, not as much the US growth itself. And that has made the Fed a little bit more careful in changing its tone and not talk about a shift in the policy stance. In the backdrop, the global growth data point had continued to weaken. And so to the extent to which the talk from the Fed was hawkish right until first week of October, while global growth data was showing some concern, that's what has created this tension between markets and the policymakers. Now, we have seen one leg move from the Fed that they have said already that they will pause at neutral. That's an indirect indication that they have given. But as I was mentioning to you earlier, they have still not brought balance sheet into discussion, i.e. that balance sheet is still expected to be on autopilot. And that's where the tug of war between markets and policymakers is likely to continue until we hear from them. And that's why I was mentioning earlier that we would be watching the next few speeches from the Fed speakers coming up in the next 2 weeks more closely.
Okay. We will depend on you to watch that and parse it for us, Chetan. Let me just squeeze one more question. We're running out of time. You have been positive on EMs. What is the pecking order, the ranking?
So our strategy team's view is that China, India, and Brazil are the top 3 picks from an equity market space in the emerging market equities.
All right. Chetan, thank you very much for staying up for us in the United States and speaking to us about 2019. We'll hope to see you when you are in India. Thank you very much for joining us. Have a great 2019.
My pleasure, Latha.